You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for a little show we like to call The Option Block. We're back from our extended holiday hiatus, some more extensive than others, traveling hither and yon all over and not doing live shows, but we missed you guys. So now we're back and we're coming to you live here on Thursday, 3 p.m. Central, 4 p.m. Eastern, February 23rd for all of you joining us live on the old Mixler. We love you guys. Love to see you guys in there. After the fact, we kind of like you guys, too. I'm kidding, of course. We like you guys as well. Of course, my name is Mark Longo from theoptionsinsider.com. And we love to hear you guys, however you get at us, via the mobile app, which is available on your preference of platforms, via the website, which we're doing some rejiggering to, but it's still up there. You guys can find all the shows on the right-hand side, the call out there, and just click on them. And the full archives are available for you there to enjoy. I think with the exception of the network, because as you might imagine, that's 10 years worth of content. That bit of extended scrolling kind of broke some systems. So I think it may cut that off, like the most recent 500, but you can get most of that stuff, in fact, all of it, via the mobile app if you are indeed so inclined. So check it out. And of course, however you listen, including listening live or after the fact, hit us up with your questions. We love to hear from you guys. You guys always send us all sorts of interesting head scratchers and puzzlers and bizarre comments and umbrage for the Rock Lobster and everything else. We love it all. Questions at theoptionsinsider.com, easiest place to get at us, or at Options on most of your social media outlets of choice. I believe on Facebook we're still the Options Insider. Unfortunately, can't grab at Options there, but at Options pretty much everywhere else you want to be. So hit us up with your questions, your comments. We do love to hear from you guys. And speaking of hearing from people, let's start off with the man who's just been traveling all over the place, just really taking full advantage of the long holiday weekend we had here in the U.S. and then some, going above and beyond with some holiday traveling. But now he's back from his quote-unquote assignment and revenge-free, I believe, for the most part. He is Uncle Mike Tosaw from RCM Wealth Advisors, returned from his extensive sojourn south of the border. Welcome back, Uncle Mike.
Oh, good to be back in the best country in the world, the United States of America. Happy to be home.
One nice thing about staying here is at least no one's seeking revenge on you, at least not in the traditional sense. You may have other vengeance seekers, but there are no, astral ghosts of ancient Aztec princes and warlords coming at you for revenge. So at the very least, we got that working for us, which is nice here in the old States. And also joining us a little farther from home, I'm not sure if anyone's seeking vengeance out in Maine. Maybe he'll tell us. He is the Rock Lobster himself, Mr. Andrew Giovinazzi, joining us from the land of the pit, a.k.a. OptionPit.com by way of Maine. Mr. Rock Lobster, welcome back to the show. And how goes the vengeance scene out in Maine?
The vengeance scene. That is what Maine is known for. The vengeance scene.
So snow sports and vengeance, the two on the main flag,
yeah,
I
my
believe.
ice rink's melting. It's very sad. But, we got a good 6 weeks out of it, but a little short of a season. Our winter is rapidly over. I mean, literally, as soon as the bell rings on March, 13th or 14th, winter's over. It's like Maine it has 4 seasons. They last 3 months, and then boom, on to the next one. It's crazy. It's like God flips a switch.
Well, we like the switch he's flipped here by the Options Insider Studios here in scenic, sunny Chicago. In case you're wondering, in case you're one of these people out there who always says, oh, Chicago, I'm terrified of it in the wintertime. Nope, spring starts mid-February here. The tour boats are back, pushing 70 degrees. People wearing shorts and T-shirts. It's lovely here. Wintertime in Chicago, the new Miami. So check it out if you're one of the people out there who's been so terrified. Maybe you want to swing by the studios. Let us know. Maybe we'll see if we can set up a little in-studio action for you. Meanwhile, it's time for us to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was catching our eye, what was rocking, what was rolling, what was moving, what was shaking in today's market activity. A bit of a quiet one, at least to end the day. We had a little bit of a range out there in the S&P, but it pretty much settled out, pretty much unched on the day, getting traded down a little bit, not sure about 12, almost 13 handles, and then kind of came right back up. So whatever action there was going on midday is pretty much squeezed out here, close to close, not a heck of a lot to pay attention to. Most of the major indices pretty much closing fractionally up or fractionally down. The tech-heavy NASDAQ, a little bit of a laggard today, off nearly 0.5%, and that's pretty much where the action was centered today. Good old VIX cash still remaining desperately north of the 11 handle, flirting with the 12 handle, right around 1185 or so right now here as we are recording it. And we asked you about your own views on how low the VIX can go. We'll get to that in a little bit. Some interesting thoughts. You guys are already coming at that one pretty hard out of the gate. You love your VIX pontification questions. You guys just sink your teeth into those pretty aggressively. So we got some for you. Also had some interesting earnings coming out this week. But before we get to those, let's check in with each of my cohorts here. See what's been catching their eye. We'll start with you, Uncle Mike, because you haven't been around in a while. I'm not sure if you remember how this works. This is the portion of the program where we tell each other what we've been paying attention to. So what's been catching your eye in today's activity, sir?
Well, in general, the first thing was the drop in the Mexican peso. I don't care what side of the political aisle you're on. The fact that when you have a president that continues to threaten to build a wall and take jobs away from a country, it definitely does not have a good effect on their currency, which is bad for their currency. But man, it is nice for the people traveling to that country. If you want to go to Mexico now, that peso is low and it is a very inexpensive vacation. So that's the first thing that I was watching. Some other things, we're up a little bit this week again. The bulls have been in charge for, a couple of weeks now in general with the S&P. A couple other things that are catching my eye a little bit today. We had crude oil. The recent high in crude oil was made back in right around I think it's actually it was the first day of trading this year. It hit the 55.24 mark. It's been flirting with that the last couple days. It's at 54. I'm showing a 54.42 close today. So that's one thing that I'm seeing. The other thing of note in combination with crude oil, kind of flirting with the highs, is natural gas just royally falling out of bed. Nat gas has gotten crushed lately. If you look at a chart over the course of the last couple of weeks, it has not been very friendly at all. Some other things over the course of the last couple of weeks, I noticed that XLF financials, they've been quite the rally recently. So there's definitely been a lot of buyers along those lines. And I think just the moral of the story is I need to go away for a week from time to time. And there's a lot more money in all my clients' accounts when I come back.
See, it's easy when you're not doing anything, and it just happens. That's why the whole trend towards passive investing these days, Uncle Mike, it's just easy. You just sit back and let the market do all the work, do all of the heavy lifting for you. A guy who must take serious umbrage at that is, of course, the Rock Lobster, who loves to do stuff. He's always extolling the virtues of doing stuff. So, Mr. Rock Lobster, have at it with your umbrage. And what stuff were you doing today?
Umbrage wise, I don't know if I have tons. What was I doing today? I was selling puts in rig, rolling puts in Twitter. That's about it on that front. Not anything super exciting. What I did notice and what I was coming across the screen was VIX cash is 1171. So, Vol still at the lower end of the range, and the Vol futures are up for, I think, the fourth time in 6 days. The closet theory is that they got oversold into the holiday, and they're just sort of readjusting back. today VIX futures were bid all the way across the term structure. So I'm finding that odd. Why is that? Let's see. Realized vol is about 4%, so it's not that. And all I can think about, actually, we have some clients that are like European, Italian, Dutch in our room, and they said, well, the right candidates are starting to lead in the polls in Europe. So I'm thinking, okay, the V stocks, I think the April future is extremely expensive. It's the index volatility isn't necessarily expensive. You look at FEYE and some of the other, Euro stock stuff. So there's kind of a strange disconnect. It's like they're bidding the futures because they don't think they're going to go down. Everybody's trying to get in front of this European vote again to try to, scoop what happened. Prior to Brexit, we had a couple, we had that huge vol run up. Then we had the huge vol sell off, right as the day before when everybody thought the polls were going to, everybody knew it was going to happen. And then, of course, obviously the vol blew up right after that. And same thing running into our election. You kind of had the flip-flop with vol. That was pretty huge. So today's I would say the first day that I'm considering that the vol is moving up for a reason other than just the future. I guess they call it just the future realignment, essentially. Just normally the VIX futures got oversold, so they're just kind of going back to sort of a historical spot, a historical premium. So if we don't, if VIX cash doesn't do something tomorrow and we still get another lift tomorrow, I will say that there's actually somebody out there. There's somebody out there buying them, and I don't know who it is or what it is, but they're taking them higher. So that is, for me, indicator-wise, that is the most interesting indicator I've seen. Because the April future is over 15, and you'd have to say to yourself, why the heck is April 15 right now? That sounds kind of expensive, because we don't do anything. The market doesn't go anywhere. So it's 15, 19. If it gets like 15 and a half, 16, then we're officially in Weirdville. So then I think we could see a pickup in the bid for volatility going into this election. And, you don't know exactly what's going to happen with all that, but so that's the thing I'm watching the most. It's not that, you could get that quick crease in equity prices here, but the vol is the bid for the vol futures is going up. So to me, that's always the strongest signal. Doesn't mean it's going to last forever, but the continued bid for vol is the strongest signal that somebody somewhere is worried about something.
Why wouldn't you be bidding a 15 vol in April when the realized vol is 5.5, Mr. Rod? I don't understand why that's surprising to you. Why is a nearly 10-point premium? That seems cheap. Buy it all.
Exactly. That's kind of what I thought. So, we came up with a VIX trade around that. I thought that was that could work out okay. So it's just, you respect when somebody is paying that much premium for something. It doesn't mean that it's going to stay there. But it is not normal, and anytime anything's not normal, then it's interesting, especially with vol.
I hope Mr. Schlesinger is out there slinging some ball, because that's a juicy premium that I think would be salivating at, sir.
Well, what's funny is, can you imagine if when they launch a realized vol future, what is that thing trading for right now? Right, and I think that's the biggest problem with the realized vol exchanges. Who wants to sell the 6% future? I mean, the premium on a realized vol future would be like $7 or $8 right now. It would be totally ridiculous. So I find that would be a very interesting product right now, with a 10-point difference in the implied and realize. But I'm sure Mr. Schlesinger will send us a note.
He will now send you a very thorough note explaining why you are a complete simpleton, sir. I look forward to seeing that because it's coming forthwith. I'm not sure if he actually tunes into this one. I know he tunes into Volviews. I'm not sure if that one's. I'll have to mention your misgivings on that program, and you will get a letter forthwith. I guarantee it. All right, let's move on to some other things that are interesting and lighting it up. People have been hitting us up left, right, and center. Snap, snap, snap. What's up with Snap? What's going on with Snap? Well, the latest incarnation. Still no options to trade, unfortunately. We're all as gung-ho as you are to see all those overpriced puts shortly after the IPO. But there are plans this weekend for a test IPO. That's right, you heard me right. A test IPO on a Saturday. Now, if you're saying to yourself, what the? That's kind of what a lot of people are saying, but it actually makes sense when you see some of the other high-profile IPOs that have gone the way of the dodo, including Facebook. Very infamously had some issues with that. Even Bats screwed up their own IPO and took out Apple in the process. So the IPO landscape process has become a little bit more tumultuous in this current market environment back when it was a decade or more ago. So not wanting to screw up. I mean, these exchanges fought hard for these listings. They don't want to screw the pooch now that they got it. God knows what they had to give up to actually get them to list on their exchange versus the legion of others. So they don't want to screw it up, so they're doing an actual test so that people can, quote, exercise their IPO trading logic. That was an email that NYSE sent to their firms. Going to be this Saturday. I believe that's the 25th. So a little interesting stuff. Of course, there were some hiccups with Twitter back in 2013, Alibaba as well. Those are also names that they had some test IPOs. This is not the first time they're doing this. They've kind of learned. They've been burned in the past, and they've learned. I think most famous was the Facebook one, but the Bats outage also got a lot of heat, primarily because it took down Apple, which was kind of the king of the market at that time. So interesting stuff. I don't know, Mr. Rock Lobster, and maybe Uncle Mike, you have this too. Are your clients... Are they calling you up? Are they in your pitch chat? Are they just kind of salivating at the prospect of being able to sink their teeth into Snap like it seems like a lot of our listeners are? Or are they kind of like, eh?
I'm kind of my clients are more in the column, I would say, for at least from the feedback that I'm getting. Now, granted, maybe for the ones that are listening, I might get a slew of phone calls all of a sudden saying, "Get me in that IPO." But overall, I haven't heard a lot from it. I think I talked a lot of people out of the Facebook IPO many years ago in terms of going all in, just because I remember all the excitement that was going on with that one. And don't get me wrong, we still had some exposure to it. We just kind of scaled into it. I know I went through it on the show when it happened. But for the most part, we are at, I would say, haven't had the phone ringing off the hook to get into that.
Surprised that all the grandmas piling into the strategic night don't want to sling some Snap. No, I'm just kidding. I know you're not into those high flyers. A little too exotic for a lot of your clientele. They like the nice meaty put rolls and covered calls so they can get out there and some more, shall we say, reliable names. Mr. Rock Lobster, before we get off, everyone and their mother wants to know about Snap. What are your clients? What are your mentees? Are they excited about this? Are they looking forward to blasting out some overpriced puts when and if it does go public and has some options? Or are they kind of like Uncle Mike's clients?
Yeah, we're a little bit, we're a sit back and wait. And I mean, they always bid these things to crazy levels. It seems like these IM services, social media services. Facebook is still enjoying, a pretty huge rally from its IPO price. So, but as far as, but Twitter's doing the opposite. So, they still have to figure out how to monetize this thing. It doesn't mean that there's not growth but they're doing a darn good job of trying to get that price out at a nice lofty valuation. $25 billion that's not nothing. It's not nothing. So, the funny thing is Facebook, the only thing all these social media platforms had in common is they came out with a lot of hype, and almost all of them traded lower than the IPO price, and there was an opportunity to buy them for not very much money. So, I mean, you can look at Etsy, you can look at Twitter, you can look at Facebook. They all spent some time in the basement. Twitter's still there. I think Etsy is still there. That's another kind of one. eBay, even after, and that was, a massive win, pulled back tremendously, I guess, in 2001 or 2002. And now it's a multiple fold winner. But, they have all spent some time in the dustbin until they started to generate the dollars. So you're not catching me on the IPO. Probably be wrong, at least on the IPO, but We'll see. We'll see how that snap works.
See how that snap works indeed. Speaking of which, we have people chiming in our comments before about, I think you said the VIX futures were in Weirdville. I think that was your technical term. We have Simon Gold writing in here saying they're looking weird because of V stocks and Eurex Vol being bought up in a big way because of the French elections. That's why UVXY and VXX are both up. He doesn't allude to the VIX futures in there is what we were talking about, but they tend to go hand in hand. If one of those is getting bid up, that usually would be reflected at least somewhat in the VIX futures as well. I think we commented, as I believe might have been on Vol Views, that the French elections certainly seems to perhaps be playing a part in that. I don't know if that's worth the nearly 10-point premium we were just discussing, Mr. Rocklauser. But that said, what do you think of this? It's all the France's fault that we have so much premium in the VIX futures. Do you believe that?
I think that's why I need another day to kind of say, well, this is going to be for real or it's just a temporary thing. But yeah, that's what I said earlier. If the premium's coming from somewhere, that's where it is. And if the right starts to pick up more votes again, that traditionally has led to higher vol into the election because everybody's afraid of a change in the status quo. So I guess at least pre-election, that's what the trend would be. So, I'm not in the business of fighting trends until they change. So we could see that higher. Once it's picking up late April or May volatility in the SPX, then maybe we'll start seeing VIX get a little bit bouncier.
I'm not one of fighting trends either, so let's keep the trend rolling, this 5+ year trend of going from the trading block into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
Everybody, welcome to the Odd Block. Didn't have a chance to hit on some of the earlier earnings that were popping off this week. Maybe some time we'll get to those, like Tesla and others in the around the block. If not, stay tuned. We'll definitely hit on those in Vol Views tomorrow. But before we do that, of course, it is time for the Odd Block, the portion of the program where we break down what was catching our eye today from an options unusual activity perspective. Maybe some call buy-in, some put buy-in, some combos therein. We shall see. We're going to kick things off. This is a name we haven't talked about in a little bit. This was a frequent offender for a little while there. This is Carmax coming back on our radar today. Ticker symbol KMX, KMAX. Closing today, $66 and a little bit of change, off about $1.50 or about a little over 2%. That's the name that does about 2,300 contracts a day, doing over 13,000, 13.5 to be precise today. 12-1 calls over puts. That should give you some inkling of what caught our eye out here today. And today's one was a little bit different. It's been a while. I'll have to look back in the archives to see. It's been quite some time since we had a good old-fashioned tree, a Christmas-type tree lighting up. Even though it's a few months late, we'll take it here in Carmax. That's exactly what we saw today. It was the 67.5, 72.5, 80 tree. If you're not familiar with a tree, it's usually doing one direction, buying or selling that first leg, typically buying because you're using the other legs to kind of reduce that price. But it could be selling in some instances as well if you want to hedge yourself across some upward strikes. In this case, we have buying of the 67 halves and then 3,500 times, a total of nearly 4,000 on the day, about 3,891 to be precise. And then selling looks like the other two legs. So selling the 70s and then selling, I think about 72 half and 80s. It was 70s and 72 halves. So it was selling the 70s about 4,000 times and also selling the 72 halves about 3,500 times. So maybe a little bit more on the 70 strike, but a total, we're doing those, let's see, we did them for, bought the 67 halves or buck and 3/8, the old fashioned numbers, selling the 70s for 50 cents and the 72 halves for 15 cents. Going that went up, I should say, 4 blocks over there on the Philly. Interesting stuff here, across the board. Interesting open interest as well. There's a ton of it, but only on one strike, which is the 70s, which is kind of odd, which is indicative that it's not perhaps someone closing out, but actually establishing an interesting and funky trade here. If you know much about trees, you know they want this thing to pop, but also reduce their cost, but not pop obviously too far, because then you get into some damage, as you could tell. Even a novice can tell. Looking at this, you're going to be net short some units aggressively to the upside. So they need a nice bounce, but they don't need this thing to exactly hit a massive home run. But it's been kind of in rally home mode, particularly for the last few months back, right around the election, like pretty much the rest of the market. It started looking north, and it pretty much hasn't looked back since, apart from a little dip back in about a week or so ago, maybe 2 weeks ago. And this thing's been it was trading as low as the election, right around 48. And now, like I said, 66 and change, and that's off about $1.50 today. So this thing has rallied pretty hard. Post-election, apparently, Carmax liking the Trump administration. Mr. Rock Lobster, kick us off here. It's been a while since we talked trees here, Christmas or otherwise here. I don't know, where do you stand even on trees? They're not really a stupid, they're kind of a variation, perhaps a more sensible variation on stupid, or perhaps not, depending on your point of view. So maybe start us off, where do you fall on the tree spectrum, pro, a con, somewhere in the middle, Yule log, how do you fall? And then what do you think about our friend here, treeing it up in Carmax?
So you're asking me where do I fall out of a tree?
Yes, where do you fall out of a tree? That's exactly.
Where do I fall out of a tree? I am never a fan of selling options for 15 cents. I don't think.
But he's doing stuff. He
is.
It's crazy stuff, but he's doing it.
It is. I don't think it's a terribly constructed trade. However, I don't know why you sell a call for 15 cents. I mean, they're trying to reduce the cost of the 7.5s. I see that. But it's possible. It's possible. I'm just saying possible that they also could be buying back that 70 call or selling out of the 70 calls because there's a lot of open interest on it. They're just, there's 12,000 open, but they only traded 4,400 of the 70. So unless we see a ton of volume tomorrow, I'm going to assume, like I do, this is part of unusual activity. You've got to do a little art and science mixed. That they want to get long and spend just a little bit to get long those 67.5s, and they're not looking for a giant jump in the underlying price. So, as a tree, I don't think it's too bad. But selling that March 75 for 15 cents that never thrills me. Then you got the risk, in case it gets bought out. I don't know. It's not my favorite thing to do.
Yeah, that extra leg. That was kind of the one that kind of threw me for a loop as well. I was with him till he got that far. Then all of a sudden he's adding a whole bunch of risk to the upside. He's net short of effectively 3,500 units for 15 cents. I mean, that's not. Of course, we know how hard yield is to come by these days. We've mocked people for rolling all the way out to April and beyond, March or May and beyond for 12 cents and less. So maybe that's good yield. That's good money. He needs to take it. But in this environment, but still, you're right. Adding all that upside risk. What if he's super right? And it comes back to bite him in a very aggressive sense. So, yeah, I don't know if I can get enthusiastically behind that extra leg. This could have been a nice vertical. I think the tree is getting a wee bit greedy. We know what happens. Pigs get fed, hogs get slaughtered. Well, hopefully our friend here is in the former, not in the latter category. Let's move on to, I think, a newcomer to our Odd Block manifesto here of crazy names with Scientific Games Corp. Ticker symbol SGMS, SGMS. Closing today, $20.45, off about 20 cents, or about 1% on the day. So a little bit of a downside move for this name. This name does just a tick under 2,000 contracts a day, doing 32,000 and change, 130.2 to 1 calls over puts. Yes, of that 32,000 and change, only 249 were puts. So yes, we're going to talk puts all day long here. No, of course, we're talking calls. Yet another bit of a funky ratio roll type calendar here, / diagonal, call it what you will, out here in good old SGMS. And what caught our eye was, starting off, the first leg was the April 16th, going up about 12,000, actually about 12,000 and change here, 12,766 to be precise. Over the Oct 22s, and looks like that was about 19,520 times. Let's see the prices here. If I could just pull here we go. The OCK 22 is doing it for 510 in the apes and 340 in the OCKs. Looks like paper selling out the April, and again, those are kind of deep in the money. Stock right around 20.5 now. Coming in and looks like reestablishing on the 22s. Again, looks like your old house money roll. The open interest on the OCKs, a whopping one contract. The open interest on the Aprils, pretty close to what we traded today. 12,924, 12,766 went up today. So it has all the odor, the aroma of a house money roll here, where someone's got some cash. He's looking pretty good here. He decides to take some of it off the table and then put some of it back to work. He doesn't think the party's over. He still wants to attend the party. He's just going to do it at a little bit higher strike and a little bit longer dated month. And looking back at the chart here, it's kind of hard to at least argue that this guy isn't sitting on some cash here, because this thing has moved quite a bit, particularly since, again, right around election time, like our other name here. This thing has kind of been in rally ho mode. It was trading almost half of where it is now, a little over $11, almost about $12 actually, right around the election. So it's rallied hoed quite a bit. About $8 and change here since then. So our friend, probably with these 16s, is probably sitting on some cash. They looked pretty aggressive at the time. Now they're looking pretty good. He decides to keep that party going. Mr. Rock Lobster, what's your take here on our friend pocketing some cash and also keeping the party alive, keeping the love alive here in SIGMs?
Doesn't this look like just kind of a giant house money roll to you?
It does have that flavor, sir, that aroma, I believe.
Because it's, I think, isn't this the old Shuffle Master? I think it is. SGMS. I think it is. They do lotteries and gaming and all kinds of stuff like that. I think it is the old Shuffle Master. Gaming, lottery, slot machines, interactive sports betting technology, all that kind of stuff. Like the little lottery terminals, all that crap. So they are up all kinds of money on this. I don't understand what drives the stock higher, but apparently the person who bought these calls does. So it looks like just the giant roll of dollars, 12,000 open interest, and then boom, up to no open interest on the 22. So somebody somewhere thinks that this is going to make them some dollars. That's what it looks like, at least on the blush I gave it.
And the interesting thing is they don't think the party's done. They think it's still going. Sometimes you take the house money off. You think the move's done. You close it all out. You sit on your $5 and you're a happy camper. In this case, he's putting 3 of it or so back to work, which is interesting in and of itself. So if you're curious about his thoughts on direction and his continued love for this name, well, then there you go. He's still loving the party. So if you're interested, maybe one to look at. All right, let's move on to our final name / victim here. This is Fireeye. I think this might be a newcomer here as well. Ticker symbol FEYE, FEYE. Closing 11/31, pretty much unched on the day. This is the name that, in case you're not familiar with it, they provide cybersecurity solutions for detecting, preventing, and resolving cyber attacks. Not exactly a quiet sector to be in these days. Kind of an active one of late. Certainly if you listen to our Trading Tech Talk program, that kind of stuff is top of mind for a lot of trading technology players these days. This is the name that does about 11,725 contracts. Today doing 48,239, 8.5 to 1 calls over puts. That should tell you where our final name was focusing its action. In particular, it was out in March. It looks like it was actually, if I can pull up the right strikes here, it was the March 12s going up 7,640 times. Looks like paper loving themselves. Those picking them up for 35 cents, starting off with a block of about 1,000 for 35 cents as the day went on. Total of 7,640 with the latter kind going up at a variety of prices. Again, the first one block going up on the SIBO, the latter kind kind of spread out a little bit. Looks like, again, just a lot of straight up call love. This strike has some open interest, about 5,300 contracts, not enough to cover this. So this is opening paper. And looking back at the year that was, it's been kind of an interesting one for Fireeye. They started off the last year right around the 15, 16 range, kind of vacillated all over the place. Hitting lows not that far from where they are now, right around the 1079 or so over the past year. So they're kind of right in the low portion of their recent range. Seemed like they topped out right around, about 17, 18 and a half right here, right around back in midsummer of last year. So our friend here thinking that party clearly has some upside as well. He's willing to put his money where his mouth is to the tune of 7,640 of these March 12th. Mr. Rockloff, take us home here. Near-term upside in Fireeye.
Well, I did some checking, and one of my clients said there was a report that Fireeye could be the subject of a takeover by Symantec, which could be a possible. I mean, volatility was up 10 points. So take your pick. There's 6,011, the 11 and a half's trading, expiring tomorrow. Those went up for a dime. So all of that stuff is, it's just all like buy every call there is. So that's that is, I just think it's takeover spec and people are buying the calls. And not too crazy.
Not too crazy. Some takeover love here for Fireeye. So we'll keep an eye on them. Meanwhile, it's Thursday where he's back. We think he's mostly Montezuma free. So without further ado, let's keep on rolling right on into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, listeners, he's back. He's kind of loopy from his trip south of the border, probably still on a bunch of different crazy medicines and all. Who knows what the typical things he's doing over there in the old RCM satellite office. But that said, he's going to give us some strategery. I have no insight. My minion's also on vacation, so I haven't had a chance to speak with them. So we're flying blind. I'm a little scared. Uncle Mike, have at it, sir. The floor is yours. Don't make me regret my actions.
Yeah, I saw the minions down at the beach out in Mexico, and they are having quite the good time down there. They have a whole new meaning to the word loco down there, that's for sure. So anyway, what I want to go through today is the importance of patience when getting called out on a covered call. I think this is very timely right now because I know there's at least one covered call writer in our audience of the masses, and there's probably at least one person.
Maybe two, or perhaps three.
You think three? Well, okay. We'll see where we're at with that one. So, but oftentimes when people are doing a covered call wheel type strategy, it's very tempting to roll up the covered call. Or let's say you get called away. Let's say maybe your covered call is maybe a couple pennies out of the money right before expiration, and you're thinking, oh, this is going to be just the ultimate covered call trade to where the stock's going to expire 1 penny below my short strike price. Covered call expires worthless, and I am just such the genius for selling this right at the right strike price. And then all of a sudden, maybe about 10 minutes before the close, the stock rallies, and then you get called away. And then on Monday, the stock rallies another couple dollars, and then you're just thinking you're not quite as smart as you used to be on Friday right before the close. I want to emphasize how you need to have patience if you're looking to get back into that stock, because of the fact that we all have stories about how when people have tried to chase the market, how it typically doesn't work out too well. And by chase, I mean automatically buying the stock at the higher price and then allowing the stock and then just having the stock come right back down the second you get into it. And then, of course, at that stage, you want to get out of it because after all, the stock's coming down now. The second you get out of it, stock goes right back up. We need to avoid that problem. And if you are a covered call trader or a wheel type trader, meaning you like to sell covered calls against stocks, get called away, sell another put to get back into them, I really believe that you need to have a buy on the dip type mentality. And the reason that I say that is because if you're buying stocks that are high flyers, they're making new all-time highs, and you just want stocks that just go to the moon. I don't think those are good stocks for covered calls, quite honestly, because if they're going up that high to begin with, just buy the stock or buy a call or do something along those lines. But if you're looking to be a premium seller, if you're looking to harvest premium, to collect income, to be someone who is getting their monthly check from their covered call income, then I think you need to look at stocks that are more on the dip. And by doing that, you're actually able to take advantage, number one, of a stock being on the dip, but number two, volatility increasing. So with that being said, if you got called away on your stocks recently over the course of the last couple of weeks with this recent market rally, you're in cash right now with that section of your portfolio. And it's difficult to want to just buy the stock to get back into it, but what I want to emphasize today is that having patience is not a bad thing. Being in cash for a couple of weeks is not a bad thing. Yes, you're watching the market go higher and it feels like you're just missing this big old party. But remember, for that section of your portfolio, your intention was to be an income trader. You wanted to collect income on your trades. So stick with what brung you and be patient when getting back in. Now, at what stage do you get back in? Do you get back in when the stock goes back down to the strike price you got called away? Do you sell a put when it gets closer to there, when you can get a little bit more premium? Well, we could talk for hours on that one. But what I really want to emphasize today is that you don't have to be in the market every waking hour of every waking second of every waking day. If you really do want to, if you have to get back into the stock, and you just think it's going to continue to go higher and you want to just buy the stock to begin with, then what I would advise doing is possibly maybe buying a call spread. And what that does is that gets you some exposure to the stock. You'll have some upside if it goes higher. And if it does go way lower, well, all you had was the exposure on the call spread anyway. And then if it does go way lower at that stage, you can sell the put to get back into the stock you didn't want to get out of in the first place because you sold a covered call because you thought that you were going to be a genius and have the stock expire 1 penny below your short strike price, which unfortunately it did not happen. So the message for today, folks, is be patient. Wait for a dip. If you're a buy the dip type of trader, which I kind of think you need to be within the covered call section of your portfolio, be patient. Although we are at all-time highs right now, and we're still not high enough for me to say my trademark saying. I still can't quite do it yet because we just keep making new all-time highs all the time. But I do believe we'll have a dip at some point, and with that section of your portfolio, be patient. And if you can't be patient, buy a spread. Leave the rest in cash. And that is today's strategy block.
We need that little music. Do, 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 do. That's one to grow on there from Uncle Mike. And now it's time for us to grow with your wisdom and knowledge and some of your other fine comments because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Like the name implies, this is the portion of the show where you guys get to take the reins. Tell us what the heck you want us to talk about. Ask us your questions, your comments. Give us your pearls of wisdom. And let's start things off paying off your wisdom from, at least so far this week. We asked you guys earlier this week. We said, hey, VIX already hit the single digits under Mr. Trump's new administration. 9.97, I believe, was the low print. Just flirted ever so briefly with those single digits and then popped right back up. We've joked before on this and other programs, Trump ain't a single-digit VIX president, but so far, at least, that doesn't appear to be the case. So we asked you. We said, how low will VIX get during the rest of his term? So you got a long time, almost 4 years, to really consider that one. A lot could happen in that period. We could have our extended summer doldrums sometime during that 4 years. We get some nice quiet time in late August. Nothing's happening, So we asked you guys, how low will that VIX limbo bar go? Do you believe it won't break 10 again? Do you believe it will get between 9 and 10? Do you believe it'll start getting dicey between 8 and 9? Or are you in the below 8 camp? Which is interesting. I have to harken back to my days out in the SPX pit to remember a VIX that low in recent memory, but it has flirted with those levels and has stayed there for some time. So not exactly perhaps as outlandish as it might seem when you hear all the time VIX long-term mean is 20 and all those things. Keep that in perspective when you're looking at this stuff. But that said, interesting one. The results so far are kind of interesting. Let's start with you, Uncle Mike. I'll give you a little bit of a break. We'll start with you, Mr. Rock Lobster. What is your answer if you have a guess? Where do you think will be? What's the low it will be between in the Trump administration? And then what do you think is winning our poll?
I don't think below 8's even possible. I don't think between 8 and 9 is possible. I don't even think between 9 and 10. I guess it could print there.
It already has less than a month ago.
Did it print a 9.99?
I think it was 9.97. I'll pull it up while you're pontificating.
I didn't think it printed that low. I'm going to say during the Donald Trump. I think it will break. It'll get into the 10 handle. So I don't see the 9.
Yeah, the low was 9.97 on the first, so not that long ago, a couple of weeks ago. It was so quick. I missed it. Sebastian missed it. It was the keen-eyed Mr. Rhodes there who mentioned it for us because he lives and breathes all things VIX, and he mentioned that very, very brief print. That was the low of the day. Of course, the low of the year. They're back on the first. So what was your guess again, Mr. Rock Lobster?
I'm just saying I think somewhere it could trade the 10 handle again for sure. Absolutely. So, 8 or 9, no chance. Below 8, no chance. Interesting.
Well, we do have a realized vol of 5, so that 10-point premium these days notwithstanding, if this takes this way for a while, that could be a little bit more relevant than perhaps we thought a month or so ago. Mr. Uncle Mike, where do you fall, sir?
I'm going to say that the audience had said between 9 and 10. That's not too unreasonable because it's not that far away. And I'm actually going to be bold on this one, and I want this one to be marked. Sometime within the next 4 years, we will print 7.94. That's going to be the low of the VIX. Some point within the next 4 years.
Wow, Mr. Rock Lobster, I can see him taking umbrage, even though I can't see him right now. I can just hear the umbrage in his ears are burning. He just came out and said it's not possible, and you just slapped him in the face, sir, and said not only is it there. And what was I'm going to write that down. What was your pick for the print?
I'm going to revise it. 7.91.
I
had to recalculate it real quick.
Uncle Mike's,
my numbers were quick.
I'm going to call it Uncle Mike's crazy VIX pick. That's what I'm going to call it.
That is a bold pick. I guess I'll just say it's a bold pick.
It's not going to stay there long. We're going to get a point to where we're going to have some insane rally at some point in the next 3 years that even I'm going to become bearish on because of the fact that it's going to be ridiculous even to me, and it's going to go down there for a little bit, and I'm predicting it's going to be the VIX buy of the century coming.
I'm curious, Mr. Rock Lobster, why are you so convinced that is not possible? Obviously, in our own lifetimes, in our own trading lifetimes, we've seen it be lower than that for extended periods. You think the way the futures are setting up now, or perhaps the ridiculous ecosystem of VIX ETPs that exists now that didn't exist back then, you think all of that is going to combine to keep enough fluff to keep us, let's say, above the 8 handle?
Well, I think at-the-money volatility is different than what VIX can print. I mean, when how cheap are all those putties going to get? You have to get, 5% or 6% at the money vol a month out? I mean, it's certainly possible, but to get that low, that would drive the puts around, 8% vol. I'm just trying to figure out how it's possible mathematically to get to Tosaw's magical number. But I'm sure Russell will chime in with his VIX calculator and give us how low the at the money has to be to do that. I'm going to guess it's got to be like 5.5% to drop below 8. So what is that? Maybe 6% vol at the money 1 month out. That's cheap. Even though it's cheap right now, let's just take a gander at how low that would have to be. Right now, VIX 1 month out is 948, right? So the vol would have to drop another 40% or so to get there. Another 30% to that level. I guess so. I don't think I've ever seen it drop that low before. I can't remember at the money vol getting below 7% in VIX, but I could be wrong. Or in the SPX.
I love it. It's been it's an interesting, it's a crazy brave new world we're in. See, Uncle Mike already stealing my thunder. I was going to make a crazy outlandish pick just to gin up the poll a little bit, get some juices flowing. Uncle Mike stealing my thunder. It's like he's been on this radio thing before or something. So I won't bother with my crazy outlandish pick. Uncle Mike has already beaten me to the punch. So far, at least, it's a pretty even battle. Actually, yeah. Rock Lobster, you will not like this. Maybe Uncle Mike has swayed it with his recent, with his craziness. But guess what's winning our poll, Mr. Rock Lobster?
Below 8.
Below 8, 30%. It's a pretty even fight. I think Uncle Mike may have just nudged it with his pick there. But it was pretty neck and neck. 24% a tie. Between, it won't break 10 again, so it won't even get to single digits again. And then between 9 and 10, both at 24%. And then right behind them, right hot on their heels, is between 8 and 9. So we got ourselves a horse race here, listeners. But yeah, below 8. So people just throwing your math back in your face, Mr. Rock Lobster, saying we take umbrage at your math. It's going below 8. And at least so far, they're feeling the no VIX love. So much for the Trump ain't a single digit VIX president. He's certainly, at least according to our listeners, he clearly is, and will be so for some time. Great stuff. Let's see how much time we got here. We got time for let's do this one. This is a quick, easy one from Big Donuts. I'm not sure what that handle is. Let's see. He wants to know. We were talking a while, I think it was last week on the show, about some July 35 calls going up in one block in WY over there, which is, to refresh my memory here, Weyerhaeuser, my favorite. They were up on their website, I believe, as well. We were talking about them there. He wanted to know if people looking to buy those calls, are they probably looking for this to go above 35 by July? The answer, Mr. Big Donuts, is yes. That's probably what they are looking for. I don't remember this one in particular. I'll have to go look at the open interest and see. Maybe look really quickly if I could pull it up here. If my scrolling speed will keep up with me. Here we go. These July 35s have about 13, nearly 14,000 contracts open. So that paper is still open. So if they were indeed opening, looks like it was, and there was no other legs that went with it, then it looks like our friends here they want this thing to pop. He also wants to know why insiders keep selling those shares. He says they feel they will drop for some reason. He wants to get our opinion. I don't know about the insider selling of the shares. We do mostly the options here, so I haven't looked into some of the filings on good old Weyerhaeuser of late. But if you're reading those and you're seeing the insiders are selling, that does seem to be a little bit at odds with what we're seeing in the options paper, but I'll have to dig in to see for sure. Mr. Rock Lobster, does this one ring a bell on your radar here? The July 35 calls in Weyerhaeuser?
I recall that they bought those calls and they were a winner almost out of the gate on those things, I thought, Mark. Isn't Weyerhaeuser a REIT now? I thought it was a wildly bullish trade, and yet it is wildly correct. So it's and the vol is still bid from where I remember it being. So an odd yet bullish trade for that still. So that's where I think that whole gig is going. So I don't know anything about the insider selling. So I don't know about. It's just that they were amazingly right for a stock that shouldn't move that much. I thought that was the most interesting thing.
Yeah, the thing has been up. These things are $1.20 at $1.30 right now. I don't remember where he printed these. I'll have to dig into the article to see exactly where we put those up. But if he put them up anywhere south of that range, he's looking pretty happy right now. And there's still a bunch of them open, about 14,000 almost open on this strike. So he's clearly still feeling the love. This is the name, if you're not familiar with it, listeners. They are a REIT, like the Rock Lobster was saying, and has been an interesting year for these guys, as you might imagine. They were in the toilet back in about February of last year, far lower than they are now, right around the low 24 about. So yeah, they're about 10 handles higher than they were right now. It's had a bit of back and forth, a little whipsaw action during the year, so things have been moving. But lately it's been kind of all north, at least since early December or so. So our friend here, perhaps well-timed. They had earnings not too long ago as well, back I think in about the 3rd or so, early February. So Our friend, well-timed here, well-timed with your questions as well. We love them all. We'll get to more of them. I promise you next week. If you got questions, hit us up. Keep them coming. If we can't get them on the show, we'll hit you up some other way, social media or something else like that. We make sure all of them are read, and we try to answer as many as we can. So hit us up, and we'll try to answer them if they're good. We use that caveat if they're interesting. All right, let's keep on rolling now with our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. This is usually where we talk about what we're watching. I promise you at the top of the show, if we can squeeze in a little bit of what came off earlier this week. We did have some big names coming off this week, even though even though earnings are kind of winding now. We have Tesla, a fan favorite, if ever there was one, or perhaps infamous fan favorite out there. You guys love them, you hate them, you love to hate them. Well, they were rocking and rolling again this week. They were priced in about $17, about 6%. They closed right around 273.5 or so, and they opened up down about 3.5%. Of course, as the day went on, they've sold off more now, and to the tune of they're off at the end of the day about 6.5%. So one of the few names that, at the very least, met and slightly exceeded its straddle and an otherwise kind of ho hum earnings season. Fitbit and stock itself kind of an option now, south of $6. They closed 588. They were still pricing in a pretty meaty straddle, about 76 cents or about 13%. They opened up effectively unched, so that was one of the better sales we've seen in some time. That thing really not moving at all. Let's see how it closed here on the day. And if I could put in Fitbit rather than Facebook, that would help. There we go. They closed 607, so rallying a little bit today. And we saw earlier in the week, good old Wal-Mart, kind of a bellwether for the economy. They closed a little bit shy of 70, 69.37 going into their earnings, pricing in about 2.25, a little over 3%. They opened up about 2.6%, and they gapped up during the day about a little over 4%. So a little bit of outperformance there as well. So there you go, a little quick straddle review. We'll get into more of that, I believe, tomorrow on Volatility Views, so stay tuned for that if you like your earnings. I know Mr. Rhodes does as well, so we'll try to squeeze some of that in. But that said, Mr. Rock Lobster, we'll start with you. Any of these names catching your eye this week in the pitch chat, and then what are you watching for the rest of this week into the weekend?
Like I said, I'm looking to see if the market they keep trying to price that election, if it's actually a big deal or not. As far as individual names, I think somehow did we squeeze out another all-time high today?
Uncle Mike is our resident all-time high tracker. I believe the Dow was flirting with it. Uncle Mike, did we hit it?
I don't believe we. Let me look at. I don't think we did in the S&P. Oh yeah, well, let me look. Hold on.
It was up 99 cents, so it was down yesterday.
Yeah, we did hit in the S&P. We did hit it briefly. It looks like.
Yeah, the closing high was 23.63. Somehow we're there again. So all I can say is get out of the way until things change. The secretary talked about tax changes that people think might be bullish. That could come as early as August. So we will see what happens. But other than that, it's just more current trends continue. They still want to buy stocks, and we'll see. I'll just see how long it lasts. But for right now, I'm just not getting in the way of it.
And Mr. Uncle Mike, what are you watching for the rest of the week, sir?
In addition to what Andrew said, not a lot. But just the only thing we got coming up next week on non-farm is in the near future. So that's one thing to look to for some possible action. And that's pretty much what I'm watching, and just to see if we can continue to make new all-time highs. The race to 2,400.
There's never been a better time to sell than when Uncle Mike says that line. All right. And that music means we've come to the end of another journey through the world of options. Listeners, touched on some earnings, got into the craziness percolating around Snap, that's soon to be IPO, got into some even funkier, unusual activity out there in names like good old Carmax and a few others here, FEYE, good old Fireeye. Got into your questions, endless debate, even between some of our panelists here about where the VIX, how low can that VIX limbo go? We'll see if Uncle Mike's crazy pick is indeed correct, or if Rock Lobster's stern nay is indeed the right choice. We wrapped it up looking into the future, but before we go, let's check back in one last time with my cohorts, see what's cooking. Let's start with you this time, Uncle Mike. What's cooking in the land of all things going long and RCM alts?
Well, hopefully going to be cleared up to take on some new clients again in the beginning of March. But in the meantime, if you guys have interest, go ahead and buy my book on the Amazon Kindle app. It is Go Long, New Option Strategies for Buy and Hold Investors. Type in Mike Tosaw or type in that title, and you should be able to find it.
It's Tosaw, listeners, in case you can't spell his phonetically challenged name, all right? And before we go, before Uncle Mike takes too much umbrage, Mr. Rock Lobster, what's cooking in the land of all things, the pit of options?
March 11th, we have a butterfly class, and that is our big event. So if you want to, we've got a lot of requests for it. So putting them on, managing them, how they actually create dollars for you, all of the above. We'll even talk about in the money and out of the money flies. So there you go. That will be on March 11th.
There you go, March 11th. Everyone who registers for that also gets a free copy of the Row webinar. I'm just joking. That's not a real deal. Don't look for that unless the Rock Lobster wants to offer that sales incentive. All things Row. Someday that will be the hot thing. Perhaps not just yet. Check it out over there, optionpit.com, to learn more. On behalf of the Rock Lobster and Uncle Mike, and indeed myself, I thank all of you out there for listening after the fact, or those of you who can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. We'd love to see you guys, too. Don't forget, if you can, tune in live. Join us tomorrow, noon Central, 1 p.m. Eastern for Vol Views, and then hot on the heels, 1:30 p.m. Central, 2:30 p.m. Eastern for TWIFO, This Week in Futures Options. If you like all this volatility stuff and skew and everything else, we get into that and a lot more, including some of the commodities tomorrow. So check that out, and we'll see you next time for more The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.